What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where, as always, I do a technical analysis and give you my thoughts on the tickers listed up above. We have our broad market, we have our core list of companies, and then I have 6 trade ideas to share with you towards the end of today's video. Some of these trade ideas did come from Discord members, so if you want to chat with myself and other great traders in real time, definitely check out the links down below in the description. Quick note as well, over the course of Sunday, Hurricane Henry will be passing overhead, so I'm not sure the state of my internet and or power, so if I'm not around in the Discord on Monday morning and the newsletter does not get sent out on Sunday night, I apologize. I simply probably don't have power and or internet. So all of that being said, let's jump into these charts. Jumping right into our SPY weekly chart, talking about candle structure and location as we always do. And for structure, we certainly have a hammer candle up here at the highs. Now, before you get ahead of yourselves, some people like to call this a hanging man, which is traditionally known as a bearish candlestick pattern. If you've watched the channel for any period of time, you know that's not the case around here. We take this candle at face value, meaning that it's certainly bullish, right? Just because it's a bullish candle at the highs does not make it bearish for whatever reason people think. Instead, we know that in this lower wick, buyers really stepped up and were able to retrace not 100%, but a majority of the down move that happened. I'll show you a number of other instances here, right? So here, technically a hanging man, right? Some people call that bearish. What did we do? We moved higher. Same thing here. A couple of hanging mans. What happened? We resolved them higher. This one, hanging man, resolved higher. This one, hanging man, resolved higher, right? So all of these hanging men, I just don't see the reason to call it bearish whatsoever. So we are going to treat this at face value as we always do and consider it bullish where buyers stepped in at the lows. In terms of location, where did this all happen? Obviously, we set a new all-time high up here, 47.11, and to the downside, we never took out this sort of weak area of lows that we had, this double bottom in place, just to sort of hover the cursor. That's at 435.86. So structurally, everything's fine, right? The uptrend is still very well intact, and we can prove that a number of ways as well. We have been bringing up the past couple of weeks this resistance trend line, and again, just because we're butting our heads into it does not mean we're looking for shorts or trying to time a market top. We just know that this isn't the most favorable location for new long-sided trades. The flip side of this coin, of course, is scrunching the chart up and looking, scrunching the chart up and looking at this from a broader perspective and drawing in weekly support trend lines. So you have something like this, not even close to it right now. If you draw in something like this, let's actually clean that up so we can discuss it in a little more depth here and trying one more time from this low and doing this, you'll notice that this is our anchor, of course, down here. Here, of course, is the first touch. Kind of get into it here, certainly here, and well above it in this most recent liquidation break to the downside. So the weekly trend still is up. As you know, if you've been a viewer of the channel, whenever we have down moves in the market, it's good to give yourself some perspective and zoom out to the weekly, just kind of see what is going on here. Now let's go into the daily and talk about tradable levels into the upcoming week here. And again, just because we were sort of rallying, or not rallying, but talking bullishly about that weekly perspective, it doesn't mean the market can't roll over. Of course, we are just favoring the trend of the market, right? So this support trend line, we discussed it in last week's video. It was going to come into play, right? And it did come into play, but just not in the exact way we wanted it to. So now that we've gone through it, it's not really offering us much. We'll remove that from the chart. And instead, what I would encourage you to all have is to go in from your most recent lows, this one in here. Okay, so let's grab that tool together, come in from this low, do something like this. And this is probably the new support trend line that I would keep a close eye on, simply because it's going to give us a rough gauge on where our higher lows should ideally form. You can see we did not get into it on this most recent drive down. If we were to get into it, this could be the potential area where a new higher low does form. But let's talk more about the action that unfolded, of course, on Wednesday and into the end of the week. Pretty bullish recovery, in my opinion, right? The selling was hot and heavy into the end of the day there on Wednesday, but the fact that we opened on a gap down and then rallied to fill that gap and accepted higher the next following day, aka Friday, that strikes me as fairly bullish, right? All of the sellers who essentially piled on into the end of the day here or on the open of the gap down day, they've all been proven wrong simply because we've closed this candle up here well above the Wednesday's open candle. Okay, so most of the sellers who got wrapped up in this down move here and or the open, again, they're proven wrong. So to me, they should be out of the market, right? If they're using smart risk management, they should be gone by now. So that opens up the door, of course, to go back to this high here towards 446. We know that was a critical area area of resistance just based on the range doubling rules from here. So remembering back a couple of weeks now, that's how we arrived at that 446 target. So do still keep that in mind to the upside here. After that, obviously the all-time high is in play and blue sky levels up and over that. So just to have that level mapped out, obviously the bubble is telling it for us. That's at 447.11, and up above are those blue sky levels. To the downside, if there is any sort of rollover, I would just keep a very close eye on this level here. Okay, so essentially the low of this day here at 438.99, call it 439 the whole dollar, simply because that is what we had as a spike, right? So this move to the downside, it really developed in the last couple of minutes or last couple of 30-minute periods in the day, and that left a spike in the chart to the downside. So as long as that low holds, it would strike me as bullish, the fact that we're accepting prices within and not trying to move away and down from the spike. The last thing I'll leave you with here on the S&Ps is the fact that we never made it to the 50 SMA and we never filled the gap, right? So technically speaking, the sellers, if they were strong, they should have gone to the 50 SMA and they should have filled the gap, but they did not do that. So what is that telling you about the strength of the sellers? In my opinion, they're really just not that strong, and the market continually gets bought up by stronger buyers who want to see higher highs and higher lows continue to develop. Checking in on the QQQ. Now, this one is interesting to me as well, simply because we've been monitoring this area of balance for quite some time. On that gap down, again, we opened outside of balance, never made it to the 50, and there was no follow through to the downside. So it's very interesting and odd to me that all of this anticipation was building, and as soon as we did break a critical area of support, as we know, just the bottom end of that balance, the energy was not released in the downward direction again. So what is that telling you about the sellers in this marketplace? They're just extremely weak. And again, the buyers strike me as being much stronger, looking for continued higher lows and continued higher highs. So at this point in time, I would not encourage you to go long blindly on Monday morning, simply because we have a coming up from the bottom phenomenon, meaning that we've come here all the way to our next critical point of resistance, simply the top end of the range. So generally what would be ideal in this scenario is some type of consolidation inside doji, some sort of hammer candle that prints, anything that's basically telling us that the buyers can take a breath, catch their breath rather, and then take it long up and out of this balance over 369 into blue sky territories. That would coincide nicely with the thesis that the buyers in the S&Ps are stronger as well. To the downside, if there is any rollover here, it would be sort of paramount at this point in time that we do hold on to the bottom end of balance here, 362.67. If it is breached again, I would say we go into the 50 SMA and the low end of this here. So let's go ahead and map that level out. Do keep in mind 50 SMA will be rising, so that would coincide for a super support most likely around 360, right? Next round $10 number right there. So that to me would be probably a buy on the first touch there, and then not on the second. On the second, if it does break, you're looking for lower 355.20, but as the chart pattern currently sits, it does strike me as more bullish than bearish here inside of the Qs. And last but not least, we have our IWM Russell 2000 and the small caps. And you can finally see that this support trend line broke down with a little bit more authority. We did print a hammer candle off of it on Monday, but since then have moved lower. So we'll clean up the chart by removing that. And this is just going to simply leave us with our range, right? We've talked about this over and over again. Opportunity arises when we're at the bottom and or the top, never in the middle here. That's, where you don't want to be active. And now that we've come towards the bottom, I would say opportunity starts to arise simply in the sense that if the rest of the market rallies, this should at least come up into that 50% of the range mark. 222.50 is the number to be watching. We did defend technically that 200 SMA. After a fake break, we never got into this 208 round number, so it's not completely risk off here inside of IWM. It's still signaling just neutral, right? It's not aggressively bullish. It's not risk off, bail out of all positions, just kind of neutral. If you've got them, keep them. If you don't have them, probably not the best time to be initiating new long-sided ideas, as we've mentioned in the S&P. With that weekly resistance trendline right overhead. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every time a new video is released. Jumping into Apple, you can clearly see that we got a fake breakout early on in the week, but no worries, we did technically hold up inside of our bullish pennant pattern, remembering that the pennant looks something like this, right? Here is the pole of the pennant, here is the top of the flag, and I would argue we're still continually putting in higher lows with that support trend line. It was active on Thursday, right? That's where we bounced out of, that's where we gapped down into. It was also a super support, right? We had that prior all-time high grouping from in here. So critical that we held there, and again, again, just like the rest of the market, sort of, it looks like the buyers are going to overpower the sellers simply because the sellers aren't that strong, right? They should have taken advantage of this massive momentum from the Wednesday candle and carried it lower. Simply wasn't the case. The 50 SMA has never been touched. We again formed a higher low from that daily perspective. You can put a support trend line on the chart if you so please. That would look like this. Okay, so all things considered, we are looking for a next attempt at 150. If it does break, you're just looking to go to the fake breakout high, which is right around in here. I'd call it 151.25. You know that Apple likes quarters, half dollars, as well as whole dollars. This 146 has acted as a pin for a majority of time. You can see how nuanced that level is, so that should be on your radar as well. We did close above the high of this most recent cluster, so to me, you know, again, whenever you're in the 50% mark of a range, so here's your range, this is not the ideal place to initiate a new position. I would wait and see what happens as we get here. If we do get the break, boom, that's your target as discussed, blue sky levels after that. If we get the rejection, then I would be looking out for that 146.50 on the downside, which could coincide, depending on when this all happens, with a higher low from that daily support trend line. Jumping over to Netflix now, great move on Thursday, honestly, and had extreme relative strength to the market, never really breaking down on that Wednesday bar. So to me, this is this chart is looking good. And the reason we say that as well is because Friday's consolidation bar never really took out the lows of the consolidation from Thursday. Let me just show you what I mean here on an intraday time frame chart. You can see that, of course, on the open, there is going to be some volatility, but on that next major pullback, we never even came into the lows of consolidation from the Thursday breakout. So to me, the chart does look strong here. We are looking for upside follow through. Our upside targets are going to be at 557 and then 565. After that, we do have the all-time high to contend with way up there at 593. I'm not saying we get there. It doesn't have to happen in the course of even this upcoming week, but just keep it on the top of your mind. To me, this consolidation looks healthy. If it does break down for some reason, I would probably avoid shorts simply because of the nature of this breakout. You can look down below. It was on good volume, so I wouldn't expect the buyers to just sort of roll over easily. You know, if it really comes back down and retests probably this area here, 524.77, that would be a buy in my opinion, simply because it would be a back test of the breakout zone from in here, but not really looking for the short down to it. I do think the buyers will give the sellers one heck of a fight if it does start to roll over here. So looking long in Netflix. Making our way over to Tesla now. Very interesting that we had a violation of the support trend line. If you remember, it looked something like this. Actually, that one's holding up. Maybe this was the one. Yeah, so that was the one we were watching for some time, back testing. But I really like the first one that we drew in there. And this is consolidating into more of a symmetrical triangle coming in from the lows. Call it something like that. Basically, our moving averages are, probably doing more of the work than we think here. But it is coming in for a daily higher low, which of course is a bullish thing. What I don't like about this chart, however, is the fact that on the back test of the breakdown point here at 694.18, you can see we did start to get some resistance and some rejection based on Friday's candle. That's not exactly what you want to see. It would have been better to have a stronger close at that area, maybe slightly above, something like that, but not the end of the world as long as we hold on to the green line and the blue line, of course, the 250 SMAs respectively, and the support trend line. As long as that happens, fine, you can remain slightly bullish here on Tesla. In terms of trade ideas, if we take out that 694 area, look for the gap to fill up and overhead. That's at 709.20 up to 714.50, right? So what you would look for in that case is a breakout, maybe some consolidation just below, and then boom, you're taking that trade to take advantage of that range right there. After that, top of balance here at 724 is in play, and as we know, 750 is the next overhead target. Based on the chart, again, I'm not anticipating we get there this upcoming week, but it is something to keep in mind. On a break of these critical moving averages and the support trend line and this horizontal level we have at 667.50, I would just look out for the low of Tuesday, that is. So let's go ahead and map that out. That's going to be here. An equal low is not what you want to see, but it isn't enough to give up a full trend reversal. So if we do bottom out around 650, wouldn't be the end of the world, but keep a very close eye on it because any more tests, right? Ideally, what you want to see is this, boom, strong bounce out of it. But if we get something that looks like this, consolidation just above, that sets up the bear case for a short down into 630. And after that, you can see not a whole lot of candle structure from in here to be looking at until the gap underneath. So Tesla, kind of more of an So Alibaba, I need your help. You need to let me know in the comments section. Is this something you guys trade? Do you appreciate the levels that I at least point out here, or should this go off the list? Now, don't get me wrong. I really like trading this one intraday, but from a swing and more market structure perspective, I'm not sure how useful these charts are. So please just let me know down below. You can just, pause the video, take a screenshot of some of these levels. That's what I'm watching for. The only thing I'll mention is that obviously this ramp up in selling volume is no good. The fact that we closed underneath this after a gap up is no good, and obviously the regulation coming out of China is no good for this stock. So I'll leave it off at that. This is not something I would advise anyone swing trades. For now, it's an intraday trader only. There is great options volume on it. Let me know in the comments if you want it to remain in the list. Jumping over to Facebook, this one did break its support trend line, so we're going to go ahead and get rid of that, but it's not really the biggest deal because the 50 SMA did provide support here and is technically a higher low than the low of this hammer from in here. One thing I would point out about Facebook is that because of this bounce here, we formed this lower high, so this is an LH, obviously from our all-time high, which we'll mark off as a big H. So the next thing that really needs to happen for the nail in the coffin on Facebook would be a violation of 347.85. So please keep an eye on that for a daily reversal of the uptrend, right? From a longer term perspective, like a weekly, sure, you can't argue that that's going to be falling out of an uptrend, but from a shorter term, daily candle by candle perspective, that needs to be your line in the sand. So please keep 347.85 on all of your charts. That being said, though, the chart doesn't look all out bearish, right? If we think about this as a range, technically what we have here is a look above and fail back into the range. In that case, as we know from the channel rules, we're talking about the upside of the range as a target. That's 367 the whole dollar. So look for that to the upside here on Facebook on the look above and fail play. After that, of course, all-time highs are in play around 375. That does negate everything I just said about 347, but please, if you're going to have any levels on your chart, it's got to be that one and probably as well this one here as a target to the upside, 367. So NVIDIA, incredible breakout there on Thursday and Friday. Really some volatility on Thursday from the earnings announcement, of course. So to me, the chart does look extremely good, right? In the face of adversity, while the markets were kind of falling apart on Wednesday and rallying on Thursday, the fact that this one moved right up and into all-time highs strikes me as fairly bullish, right? The other thing to note about this chart is technically, I would argue this is a defense of the 50 SMA. So to me, chart does look good for higher. One critical area that you might not be able to, well, I guess you could see it from the daily here, yesterday's high, or Thursday's high rather, at 205 should be respected, because if we go intraday, just like we looked at in Netflix, I believe it was, you can see that that was, of course, the high of that day, and then it sort of respected it here. If you really wanted to get nitpicky, you could argue that the level to hold would be here around 202, but for me, the most bullish outcome, and even into the close here post-market on Friday, that is extremely healthy bullish consolidation there. But any moves like this in the pre-market on Monday sets up the breakout into all-time highs up and over 208.75. So that's what I'm watching out for here on NVIDIA. Chart does look, again, extremely bullish given the context of everything going on here. Obviously, it would be a continuation play of this move here after consolidating for a little while, getting tighter. Boom, we take the break into blue sky territories, whole and half dollars, intraday levels that do form. To the downside, if we do fail under 205, not the end of the world. Next major area to keep in mind is that 200 psychological. It was also the top of balance from in here, offered some congestion, so I would be watching maybe the second best scenario would be consolidation like this, and then boom, the breakout up and over that 208.75. Anything underneath that puts into play a violation of the 50 SMA, in which case I wouldn't really be looking long. Again, if you just remember our range rules, we would kind of be in the middle of this, right, at the 50 SMA, so not the greatest place to initiate a short. It's 50-50, right? You either go higher and or lower. Opportunity is here and or up here, and that's why we're looking at the opportunity to go long on the breakout here in NVIDIA. So Microsoft, my goodness, this one is a ripper as well, clearly making a statement on Thursday and into Friday. Had a small gap to fill underneath, and it didn't fill it all the way, right? So that is another sign. That's one of those things you can pick up intraday. How bullish or bearish is the movement? Well, did it fill all of the gap, some of the gap, none of the gap? And Microsoft filled some of the gap and then had a huge reversal back to the upside here, closing in blue sky territories, of course. So we are looking for continuation. The other thing I'd point out is obviously an increase in volume down below. So it strikes me as a healthy move into the upside. Now, you may be seeing these levels slicing through the middle of the candle, and again, that's simply coming from intraday levels. If we do something like this, you can clearly see some pullback areas that we can monitor for signs of strength, right? So the first pullback area would be here at 303.37. You can, again, see, just like NVIDIA, kind of sideways into the close here on Friday. We'll see if there's any sort of move like that, breakout is obviously over the 305.85 into blue sky territories. If it pulls back and violates 303.37, you're looking for the next major pullback low, which would be in here around 295.19. That would be the area that would need to hold to remain bullish on Microsoft. Otherwise, just flipping back over to the daily and looking at this from a different perspective, right? If we were to do something like this and roll over here, and give that up, what did we just do, right? We retraced nearly 100% of that move, and that is not a true sign of strength. So to remain bullish really has to be up and over this 295 on any further consolidation. If we do get down to this 290, then watch for sideways, and then boom, if we get the break, probably target the gap fill and or 50 SMA here from 283 down to 281. So last but not least, we have the beast Amazon here, and this one's kind of not behaving like the rest of our tech. Most notably, if we look at the activity that happened on Monday, huge hammer candle at the 50 SMA, or excuse me, 200 SMA green line there. Let me zoom in so you can see that a bit better. So we're talking about that green candle there, which was a sign of hope for the buyers, right? This long lower wick would indicate that they stepped up, they defended this area on the chart. But instead, into the end of the week, it was clearly a dribble lower, and we even took out the low of that hammer candle. So to me, it's not looking so hot here in Amazon. I would expect a slow grind lower, maybe into this 3132 and or 3,000, the whole number, right? That's if it really gets going to the downside. I'm not saying it gets there all in 1 week, all in 1 day, anything like that. But the outlook, just comparing this to the backdrop of the Qs and the S&Ps, which had a miraculous reversal after that major gap down on Wednesday, it doesn't strike me as something I would want to be long just yet here in Amazon. On any sort of moves back higher, do keep an eye on the 200 SMA green line here, and then after that 3,300, and of course bottom of the gap, which of course is overhead at 3,390. But as it sits, not something I would want to be long in right now until we see trend reversal. Quick reminder to hit the thumbs up button and subscribe if you have not done so already, and let's jump into these trade ideas. So first one is on C for Citigroup, and of course the idea here is essentially a gap fill reversal, right? So here was the gap, remembering that this area was unfilled. We came back down, filled it, and now on Friday's action, we actually printed a hammer candle. We also have the 50 SMA tangled up in there as well, providing some sort of support. So if we can get a reversal out of here, maybe take out Friday's high and start to move higher, I think a clear target up above is here at 72.40, and after that the gap fill up towards 72.91. So not a whole lot of meat on the bone in terms of actual range to trade here, but instead this acting as a magnet up to there is going to provide that trade opportunity. Of course, in this instance, the stop loss is going to go underneath the low of Friday. Not interested if we can't take out Friday's high and we just kind of dribble sideways and or lower into the upcoming week. So Citi, first trade idea there. Next up is on AMAT for Applied Materials. Zooming in here, very simple sort of idea in terms of structure. If you've watched the channel for any period of time, you know I like equal highs here. So 132 is going to act as a pressure cooker top. Now, mind you, we are at the bottom end of this sort of range that we've established. You can see Friday wasn't the best day. It was on increased red volume, but if there is a reversal here that takes us back up to the highs, that's obviously going to prove everyone wrong who shorted on Friday, and they should cover. There should be a miniature short squeeze, if you will. Again, I say that very lightly in the light of AMC and GameStop and all that stuff, but literally shorts will cover and they will add to the buying power if we start to take out 132. In that case, I would argue the 50 SMA should be your first target, and after that, looking left here, very emotional selling. So I would argue, maybe we come all the way up into those highs, but we should move with relative ease over the 50 SMA if we really get going. Clearly, the stop loss in this case is under here, and or if you wait for the breakout trade, if you're someone who's patient, this would probably be the trade I take. You wait for the breakout up here. If we break, your stop loss goes underneath because that would be a failed breakout in the case we trade under 132. Next trade idea is going to be on TSM, and this one is simply a bearish flush. If we zoom in a bit here as that chart loads, we'll adjust the chart like this so you can see a bit better. You can clearly see, and I have this chart marked up, I'm watching this, you can see touch, number of touches, and number of touches here. So on Thursday, certainly a green reversal filled the gap overhead, but on Friday, it negated a lot of that activity. So to me, it looked like a pretty weak close here around this 108 whole dollar. If it breaks, we're looking for lower targets at 105.60, and then after that, we have 103 the whole dollar. Would not be interested in the short-sided trade if we start to get up and above this 110 area here. That's why I have that marked off. Simply, I can just show you if we go into a 15-minute chart, you can see from here that was consolidation lows from that that Thursday activity. Anything above that would kind of negate the more bearish skew here inside of TSM. So going back to the daily, that's what we have here. Next up is PPL. That's not PYPL, not PayPal. This is PPL Corp. Okay, so zooming in, what we'll notice is that we just simply have a grouping of highs, prior structure right around this area. So mapping that out at 29.75. If we scrunch this up and look left, a whole lot of nothing until we get into these all-time highs closer to 30.75. So about $1 to move here. And again, this might be for a newer trader, someone who wants something that moves slightly slower. This could be a great idea for you. Really liking the volume that came in on Friday on the breakout candle that took us right into nice market structure. Not interested in the trade, or really would wait for the trigger up and over here and just sort of say neutral on any consolidation or dribbling lower here. That would sort of negate this idea. Next up, we have Snapchat, and this one's kind of interesting and poses the potential for a look below and fail, right? And the reason I say that is if we map this out as a range, right? So do something like this, you can clearly see that this was our range. And on the back test, it looks like we're starting to get some resistance at surface level. But if this is truly a look below and fail, we start trading above 72.88. You know, the target is always the top end of the range here at 78.57. Plenty of meat on the bone for this trade to unfold. Would really only get bullish if we start getting price acceptance above that number there. And as you know, this is the upside target. If you want to go short, I'd probably wait until we start dropping underneath this low here, simply because of the market structure we have. It was a pivot high, and now it's acting as support around 70. The whole dollar short wouldn't really be my first idea here in Snap, but one potential way you could look at it. And then lastly, we have Kohl's, right? KSS. And this one is pressing up into a horizontal area, something that would look like this, around 57.50. And again, looking left, there's immediately a gap to fill, so plenty of range overhead until 59.50. So about a $2 move there available without any resistance. And then following that, we would monitor into all-time highs, essentially looking up at 63.82. Not so interested in the trade if it never breaks and starts getting acceptance above 57.52. If it dribbles lower, obviously that negates the entire idea. So waiting for the break up and over, price acceptance up and over that area there. What would strengthen this chart would be a little bit of a pullback here, a higher low, and then boom, something like that. That way we have an area where we could use a looser stop if you want to swing this idea here on Kohl's. So that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget, I may or may not be around on Monday or even Tuesday, depending on the situation I find myself in. But all of that being said, I wish you all a green trading week.